Technical Analysis, October 17th, FXEmpire.com. The light sweet crude market, which you see in front of you here, had a very strong day on Friday and managed to break the barrier set up by the last couple days. However, the $90 mark is sitting just above, and we aren't too far from it, just about $2. So the risk to reward ratio on a long really isn't there. However, if we get a daily close above that area, that would set up longs on a longer time scale and time horizon. It would constitute a trend break, as it would at that point in time break the lower highs that we've seen. With the weekend coming up and several euro headlines out there, it's going to be difficult to call this until we see what happens over the weekend. In the meantime, though, we need to see a daily close above 90 to get bullish of this market. Looking at the Brent markets, it's a much more impressive move during the session, and much like the light sweet crude, it did have massive volume. Again, though, is this an energy question or is this a weak dollar question? We think it's the latter of the two, and we think that it's basically the traders out there expecting some type of magic out of Europe over the weekend for some kind of magic solution. They will more than likely be disappointed, and at this point in time, we think that this probably has more of a risk to the downside. Besides, all of these green candles, to suggest that that's parabolic is simply stating the obvious. With 115 and 120 directly above, we really need to see those broken through before we could get long for any length of time, and there is massive supply at both of these levels. So we simply are waiting for weak candles because at the very least this market should be pulling back.